Good morning, all. It's a great pleasure and privilege to be able to join you this morning and to share some of the insights on the markets. I think there are a lot of dignitaries here, and I believe the protocols have been observed. I would just like to acknowledge the Honourable Minister. I'm pleased of the statements that you made and the commitment from the Ministry in terms of developing capital markets. It is a really important source of funding growth, and as with all markets across the globe, it is important for the government itself to set the pace and really drive the development for the capital market. So that is very encouraging to hear. I think as Muzi has said, it is the market, the local market is very well developed. I think there are a number of challenges, and I'll touch on some of the learnings that we've had in various markets and share with you, I guess, how we can unlock some of the value in the local market. But it is very encouraging to hear the developments in the market. I think the platform and the infrastructure is there, the funds are there. I think it's just a matter of unlocking some of the challenges, which we see across the region as well. So it's not specific to Botswana, but I think something as a continent that we need to collaborate on and work on continuously. So just in terms of my discussion today, you'll see just high level some of the sections that I'll touch on. I think as a start, previous speakers have touched on this previously, but we are in very much an evolving environment. I think following the financial crisis, there's been a lot of changes in the regulatory environment, which will change the dynamic in terms of how we fund generally, whether that's from a corporate growth perspective, from a governmental perspective, but particularly from an infrastructure perspective. One of the key changes from a regulatory perspective will increase the cost or the regulatory cost of bank funding, and obviously that will impact the cost of funding for borrowers generally. But one of the other and more significant factors that will impact funding in the traditional sense is the ability to fund long term. And this is a great opportunity from a capital markets perspective, not just in terms of channeling the savings, which are quite significant as was highlighted previously, but in terms of providing the long-term funding that is much needed, and particularly from an infrastructure perspective. If you're looking at an environment where you are looking to match fund and match your asset and liabilities, it is quite important then for governments, for infrastructure spend to access much longer term funding, north of 10 years. We see governments funding pretty typically in the 30 years. Some of our international competitors are funding even all the way up to 100 years. So it is really important for infrastructure to be able to access long-term funding. The market, and I think the infrastructure is there. I think largely when we look at African markets, it's about developing a culture of debt and a culture of understanding debt in the context of capital markets. Very typically, we have very well evolved and sophisticated equity markets, and fairly similar in Botswana as well, where there's a lot of activity and development and understanding of the market and an appreciation for market value and market trading. But when you look at the debt space, there is a lot of nervousness from issuers, typically around accessing the debt space in the capital markets. And I think a lot of what needs to be done is about driving a facilitating environment, an enabling environment to allow corporates and other issuers to access the market, and therefore driving diversity in issuance. I've just highlighted some of the key points that I'd just like to talk to in terms of what are the building blocks of building a robust market, and what is it that's important to different players in the market. I think the first point Ms. Molefe articulated very well in terms of the regulated savings environment, and it is very encouraging that in a country like this, where you have the funding, you have the assets under management, and it's now a matter of deployment and creating the actual assets. So that is indeed a good problem to have. The legal and regulatory environment, I think, obviously, given the nature of funds that is utilized, there's a good level of certainty in terms of return on investment and a structural legal framework that is required. So it is about enabling an environment where investors also feel secure in their investment and the ability for them to earn their returns. Government benchmarks are very important. I think capital markets across the globe, it is really the governments that create enabling an environment, and they create the platform. It's not only important from a benchmarking perspective, but it is also important from driving growth in the market. It's about accessing deeper pools of liquidity. It's about pushing the yield curve and giving access from a term funding perspective to longer tenors. And of course, naturally, because you create the risk-free rate, it's about creating a reliable pricing point that can be accessed regularly. So if you want to drive issuance and if you want issuers to come to the market, they need a relative point, and it's about that consistency. The listing and exchange, I think, over and above the regulatory aspect and the oversight in terms of the issuance and I guess the operations of the exchange, I think it's actually important to have a market where information is shared, where there are pricing points. So listings are important from developing a market, so people are aware of what is happening, how it's being priced, what the dynamic in the market is, and they can adapt to that. It's about sharing information. Very often in developing markets, we see instances in where there is actually a lot of issuance, but it's not necessarily happening on a platform that's observable, and it may be on an over-the-counter basis or on a private placement basis. And although that's encouraging, what you want is actually a market where there is information and people have the visibility of the trades that are happening. Liquidity is another important point that I'd like to touch on, and I think that's it's important for valuation perspectives, I think obviously from an accounting and management of funds perspective, but again, it's around the availability of assets, and that has been touched on before. It is important, and very often it's very typical, and even in the South African market, we see a buy and hold type of mandate and management because the assets are so scarce. But when you have liquidity, I think it drives a lot more valuation and interaction and issuance if investors have a view that if there's an instrument, they have the ability to get in and out of it, if mandates may change, if the circumstances change. And that, again, I think will lead to more funds that are actually being allocated and participating in the fixed income space. The depth and breadth of issuance is also important. If you are going to utilize this consistently as an alternative source of funding for corporates, but also providing, I guess, a diversification in terms of assets that are available for investors. There has to be regularity in the issuance, and there has to be significant market volume to support it. If we are encouraging state-owned companies and utilities and other corporates to access the market, they need to know that they can meet their funding objectives and that the market has the depth to support from a debt perspective the funding that they need for growth. Transparency is also an important one, and not just from a market operational perspective. I think it's important for investors and for people who hold the exposure to have a good understanding of the businesses, and I guess also a voice within management, and very similar to what you see in the equity space where the actual investors have a voice and are engaged typically, is what you want to see from a debt capital market space. It builds a lot of discipline in terms of how businesses are managed, and I think brings along to the process new stakeholders in the bond investors. So it is really important to have a market that is transparent, that has the right level of disclosure for the protection of the underlying investors. So I'll quickly just touch on some of the challenges that we see, I think, typically in developing capital markets, and then some of the quick solutions. So lack of supply, I think that was touched on. It's very rare where you have asset managers and investors saying that assets are as rare as hen's teeth, and that is quite something to behold. I think this is really important. It's about how you drive it is about building a culture. I think we have really positive steps in development in this market, but I think it's about encouraging corporates and state-owned companies to be accessing the market via debt capital markets. We have a lot of people who are still reliant and still very comfortable in the context of banking relationships and bank funding, and I think it's about making people understand that the market provides a similar amount of flexibility, provides the right amount of depth, the tenor that they need, and also the pricing benefits that you see in the debt capital markets. The other points that I'd like to touch on the slide are just around the timeline of issuance and the bond issuance fees. And I think there it's about creating an enabling environment and an easy way to access the market. It does not help if there are kind of constraints and limitations to the ease of doing business and accessing the market, because that dissuades issuers from attempting to access the market. So it is very important that from a timing perspective, the capital markets can be seen as being very competitive for a time to market, but also that the platform and infrastructure doesn't provide another layer of cost to accessing the market. And that's really important from an efficiency perspective. So how do we tackle these changes, and what is it that we can do to help resolve the issue of limited supply? I think one of the interesting things is that when you look globally, capital markets are very deep, but they're very well understood and very easily accessible and understood by issuers. Typically, you would see an 80-20 split between funding from a corporate perspective between what is raised in the debt capital markets and what is raised in the bank markets. And what we really want to tackle here is driving that culture of encouraging borrowers generally to move away from the safety of bank funding and access the capital market. And I think it's really about creating and driving a culture. These types of engagements are really important in terms of connecting the pools of capital from an investor perspective, but also encouraging and giving issuers the comfort that these funding mechanisms are very comparable to what they have in place already. Again, the process has to be easy and efficient. It can't be cumbersome. It can't be bureaucratic. It has to be relatively easy for people to access the market, and we need to drive that market efficiency to encourage regular and consistent accessing of the capital markets. The broadening of the investor base, again, I think here this economy is in good stead in terms of the funds and understanding of the capital markets. But I think what you will see as well is as the asset class develops, as investment houses also would have far more dedicated teams who have very in-depth knowledge around the valuation and understanding of credit risk, as well as the ability to analyze, make prices in these instruments. And that's really important to drive that deployment of funds into the fixed income market. Improved market and efficiency, improved market access and efficiency. There again, I think typically what we see across the globe is very much a standardization. I think in this market, the kind of terms of play and rules are very well understood, but it's about creating a platform that's very easily repeatable and accessible at very short notice. So some of the reforms that we see in a number of capital markets from the developing to the very well developed is standardization. From a document and process perspective, we see pretty typically in international markets program platforms that are created, and I think that really helps get investors very familiar with the terms of issuance and the underlying credit, and that facilitates very easy access for the borrowers to come back into the market. The issue of best practices as well, I think other than creating ease for local investors, also encourages understanding from international investors. And when we start to have very integrated exchanges, I think there's a lot of work regionally and a lot of recognition across the globe and alliances from an exchange perspective. That actually creates great visibility for domestic markets and also creates international investor interest. So when it's well standardized, well understood and well functioning, you do start to see the benefit of internationals participating and creating even greater liquidity in the local market. This I'll touch on very briefly in terms of the development of the local currency market. I think previous speakers have touched on it. It is a well-established market. The fundamental building blocks are there, which makes solving the other problems relatively easy. The liquidity is there. Also, very interestingly, is the diversity in issuance. And I think that is a signal that there's a willingness and an understanding of the product. And I think what needs to be resolved is then how we encourage people to access the market more regularly to drive, the creation of assets, to drive the liquidity, to drive the pricing points. I think the other important thing, this is just a quick rundown in terms of the notes that have been issued in the market, and it's a significant list, and I think it's something to be proud of as an investment community and exchange. The other very interesting thing about Botswana is the ability to actually access long-term funding and to access across the curve, which is not something that we see fairly regularly in some of the younger markets. This also means that it compares very favorably. So if we look at the context of developing markets across Africa, Botswana compares very favorably to some of the other peers. I think that means that it's well placed. There's a level of sophistication and enabling infrastructure. And if you look at the depth of the market compared to markets such as Kenya and Nigeria, it is fairly deep from a size of transactions. So very well placed in the context of the continent. With respect to determining the optimal capital structure, I think I will not go into the finance 101 and optimal capital structure issues, but I think the point there, and it talks a lot to what I've mentioned before about building a culture and an ability to access the market. A lot of businesses understand the optimization that debt provides in their businesses, but typically the comfort area is to access bank funding on a bilateral. I think it's behind closed doors. People get very comfortable in their banking relationships. The point I'd like to highlight here is that, again, there's an ability to diversify your source of funding, and I think having come through the crisis in this market, it's highlighted very important reasons as to why you want to have some diversity in your funding sources. But it provides a very similar level of flexibility from a product perspective. There are very few things that you can do with a bank that are not available or accessible in the capital markets. And I think that's an important point, is that it compares very favorably from a flexibility of funding. It exceeds, in most occasions, what the bank can provide from a a term perspective, and because of generally the nature of the savings industry and the regulatory costs faced by a bank, it is very often in very efficient markets a much cheaper source of financing and funding. When it comes to infrastructure funding, and I think there's a huge amount of opportunity here. I think there's, if you look at the story of growth on the continent, and if you compare that to where we find capital market funding, there is an enormous mismatch. I think Africa is obviously recognized as a significant source of global growth. There's a lot of development that's yet to happen on the continent and a lot of value to be unlocked. And now the question becomes how you fund that. And capital markets really are, both locally and internationally, a very deep and reliable source of funding to unlock that growth. If you look just from a growth perspective and where the markets are developing, it's very encouraging that more and more we see across the continent markets developing, local currency markets particularly, and the growth in issuance in those markets. And that's important to fund the growth and to fund the infrastructure. The other thing that we unlock from a capital markets perspective is actually long-term financing, which will become more limited from a banking perspective as we see the full-on implementation of Basel III and those kinds of regulations. So it is important for us to be accessing and developing local markets to drive the funding of infrastructure. I mean, globally, there's a massive need and a massive gap in terms of infrastructure development, and capital markets are regarded as one of the most important ways in terms of closing that funding gap. In an economy such as these, where you have the funds, I think it is very encouraging, and it's more about driving the culture within, I guess, the government sphere, municipalities, and state-owned entities to enable them to actually access the market for funding of growth. So lastly, and in conclusion, I just wanted to touch on some key trends in African markets. I think we would expect sovereigns to really continue to be the driving force, I think, until capital markets are very well developed. And that's both on the local front and international. I think when we have if we have good practices in our local markets, it increases the number of international participants and interest in our local markets and in local currency, but also unlocks the value and the depth of accessing the Eurobond or international markets in hard currency, and that is a significant source of funding when you convert from hard currency to local. I think one of the other important things that I wanted to touch on in the slide and in the development is actually the regional integration and the collaboration across markets that we see operating with relative success. If you look collectively and even within the SADC region, you have very well developed markets with a lot of depth, and I think the question is how do we standardize our issuance and documentation and market and align it so in actual fact we leverage off of this liquidity and create the ability for corporates across the region to tap into various markets. It's been done with relative success in East Africa, where there's an enormous amount of alignment from a documentation and regulatory perspective of the exchanges there. And that really unlocks a lot of value when you create the ability for issuers and investors to move across markets and access that funding and liquidity. I think it's very exciting times for us as a continent. It's very exciting times in terms of the development in financial markets and in the financial industry as a whole. And I'm very encouraged by being here and being part of the conversation, because there's an enormous amount of value that can be unlocked just in this room in terms of how we deal with some of the issues and some of the challenges and really power the continent to its next phase of growth. Thank you very much for having me. It was a pleasure to be with you.